Welcome back. You're watching Markets at Noon, and what a day it has been for the primary market and the activity that we've seen when it comes to the listing of three marquee IPOs. Meesho, Vidya Wires, as well as Aequs, and blockbuster listing for Meesho. Similar moves for Aequs as well, while Vidya Wires was largely flat. So let's understand what this means for some of these IPOs and how the street is taking a look at all of these. How is the street perceiving these IPOs? We have Mr. Sunny Agarwal, the head of research at Fundamental Desk at SBI Cap Securities, joining us on the show. Sunny, hi, thank you so much for your time and good afternoon. First of all, let's talk about Meesho, because what a fabulous listing it has been for Meesho, a 45% premium listing. Now, after the listing, what is your view on the valuation that Meesho is trading at?
I think again, coming to the listing of Meesho, I think listing has been very fabulous. And as we speak, at the time of IPO at upper price band, the market cap was closer to 50,000 crore, and assuming a 50% listing gain, that comes to 75,000 crore. So coming to valuation, at the time of upper price band, the issue was priced at 5.3 times price to sales ratio, and as we speak, it is closer to now 7.7 to 8 times price to sales ratio. I think now it is trading in line with other new age businesses as far as EV to sales ratio is concerned. But one has to keep in mind that Meesho has got many levers to enhance its profitability. A case in point, as of now, they are not charging any commission to the consumer or a seller. And if you look at the platform on an annual basis, there are 250 crore number of transactions which happens on that platform. And even if they are able to charge 1 or 2 rupee for every transaction, that can add closer to 250 to 500 or at any EBITDA level, straight away that goes to the bottom line. So I think, and at the same time, advertisement revenue as a percentage of GMV or NMV, that continue to lag behind the global average of 5 to 10%. So Meesho is that closer to 2.57%. So that is an additional lever for Meesho to deliver a profitable growth ahead. So again, if somebody want to deploy fresh money at a current juncture, would recommend to add one tracking position as we speak, and follow the performance of the company over the period of next 2-3 quarters to see how management is able to execute the growth strategy, and are they able to deliver a clear-cut guidance in terms of path to profitability and execute the strategy well over the period of next 3 to 4 quarters.
Okay, so guidance on path to profitability will be crucial for Meesho, but other than that, the outlook continues to remain very positive. But Mr. Agarwal, let's also talk about Aequs then. That listed at a 12.5% premium for someone who subscribed to the IPO with the objective of earning listing gains. Should they now hold on to their position, and is it a fundamentally strong company to hold for the long term?
Yeah, coming to Aequs, I think again a very niche business as far as aerodynamics or aeronautic business is concerned, where they are commanding a 25% EBITDA margin. And one has to keep in mind that the business model is very similar to auto EM, auto ancillary, where usually auto ancillary companies usually get to on a very little margin, as most of the OEM will try to squeeze them out. And the company generating 25% margin in aerospace division, that itself shows the criticality of the product and the quality of product which they are offering to its global clients. So I think a very niche manufacturing precision engineering component business. Again, this story is a long-term story, because as they cater to aerospace industry, the gestation period or the order execution period is slightly longer over there. Consumer is a new business for them, which is a loss-making business as capacity utilization is low. So there, as capacity utilization increases, at overall PAT level, the company should able to deliver a healthy earning growth going forward. So more of a long-term story. If somebody was looking for only listing in, they can book the profit. But if somebody is willing to hold on for long term, they should stick to the business from next 3 to 5 year perspective.
Okay, so that's on Aequs. But Mr. Agarwal, let's talk about the third IPO that made its D-Street debut today, Vidya Wires. Are you bullish on Vidya Wires, that too with a long-term time frame, or would you rather recommend to wait for some more time, for some more clarity on the earnings trajectory, and then perhaps take a call?
Again, coming to Vidya Wire, commodity business wherein they are making winding wires where margins usually tend to be low. It's a more of a volume-driven business as we speak. Vidya Wire is something in case there is a listing in, I would recommend you to book the profit in Vidya Wire and track the performance of the company over the period of next 3-4 quarter. Even for long term, we'll recommend to wait and let the company come out with the first quarterly numbers and then hear out the management in terms of the growth strategy. So would like to follow and wait and watch approach as far as Vidya Wire is concerned.
Okay, so cautious call coming in on Vidya Wires, and that one got listed absolutely flat on the exchanges today. Mr. Agarwal, thank you so much for taking your time out and joining us here and helping us understand what investors should now do with the 3 latest listings. Thanks so much for joining us today. But that's all the time we have on this edition of Markets at Noon. Thanks so much for tuning in. But remember, all about your company will come up next.